Hey everyone, welcome back to my channel. So the Fed paused rate hikes but are looking to do a rate hop. What does that truly mean? Well, that means that the Fed is looking to skip 1 or 2 months and then increase the Fed interest rate. So they're saying that the interest rate will go to 5.5%. As you know, the economy is already seeing cracks. They want to still monitor the situation, but a little bit more slowly and see what happens. Now, I do believe that interest rates need to go up a little bit. But the Fed has promised at least 2 more rate hikes for the year. So that means after they hit 5.5%, they will still do an additional rate hike. You remember at the start of the year when they were doing 0.75 basis points every single time. Then they lowered it to 0.50 basis points every single time, right? So they've slowed down and now they're doing a rate hop where they skip a few months and then do one. They're slowing down, but they're still, again, attacking the economy with these high interest rates. Now, we do see inflation is starting to trickle off and inflation is starting to decrease. However, they're very, very minimal percentages. And the Fed is looking to see more tightening in the economy in order to produce a downturn that is sustainable and not going to take everyone out of the market. So what I see happening is more businesses will definitely falter due to the increase in rate hikes. More people will get laid off, which will increase the unemployed population. There will be less savings among the middle and lower income sector. And then I was actually shocked to see that more people on the higher income side were getting hit because typically they're the last to go. Typically, everyone else is cut at the bottom first. But there are certain positions that you need, which is your workforce, to continue working. And that is going to continue to happen until demand for that market is shortened. That will continue to happen. So if certain items are not needed, for example, clothing, I'm already starting to see tightening in that sector. But Amazon, however, they're still booming because they have a variety of things to offer, right? Cars, that sector is starting to be tight, but Tesla is able to lower the price and therefore able to continue to get buyers to come into the market who can justify paying for a new vehicle at $30,000. And so now, with the increases, we're going to see a true demand being needed versus what people are actually willing to pay for those things. So the food sector will continue to be good because everybody needs to eat. However, certain sectors that don't necessarily add too much real value to your life, certain sectors that don't necessarily keep you afloat, they are going to be diminished. The going out to the clubs, a lot of these party places that have already been heavily hit during 2020 are surely going to be hit again when people just don't have it. And you will definitely see an even stronger shift during the winter months, leading out of the summer. So especially now when interest rates are going up and people are spending the most that they will spend during these hotter months, when winter comes and the savings are low, it's going to be definitely difficult to navigate that type of environment in November, December. going into January. So definitely, I do think that an increase is necessary. I'm not sure that two increases are necessary, but the Fed, I think, have actually done a good job raising rates. Although at my detriment, it didn't allow me to buy as much real estate as I would like. However, they definitely did a good job in trying to curb inflation, and they're still doing a good job as of now. I can honestly say, if I'm being honest. We all understand that inflation cannot be rising at 7% per year, or else our dollar would mean absolutely nothing, and the money that we make would mean absolutely nothing, right? Because we would not be able to sustain with a $5 menu and no $1 menus anymore due to inflation being so rampant in America. So the Fed is definitely curbing inflation with these rate increases, and we are definitely starting to see better signs in the economy that inflation is going down. But with another rate hike, we'll definitely see more tightening. And a lot of people are just oblivious to what is going on. A lot of people honestly don't understand that the market is taking a turn. A lot of people don't understand, if you're not in the sectors where you need a loan, whether it's a car, whether it's a business loan, whether it's a home, whether it's a personal loan, whether it's a student loan, whether it's a credit card loan, whatever it is, if you're not in those sectors, then you honestly don't understand what is truly happening in the economy. If you've just been in your bubble, you don't really understand what the Fed is doing and what is really happening in the world. Certain people are just now starting to notice, whoa, food is a little bit more expensive, right? And so as that starts to trickle into the economy, some people are going to be completely confused and amazed by the downturn that is definitely going to happen and impact us. Now, whether it's a strong crash or a slow crash is to be determined. Some people are actually upset that the Fed is doing a hop instead of still aggressively pounding at these rates in order to curb inflation. Some people want the Fed to be a lot more aggressive in curbing inflation. But in the beginning, I saw a lot of people who were upset at the Fed because of job loss being something that could definitely happen. And now they're the ones begging for it to continue. So I know what it's going to do for me is only going to increase the high interest rates in my savings account, is only going to increase the amount of cash that I have in order to spend going into a better real estate market with lower home values, which will allow me to buy more. So it's only going to benefit business people who understand money and understand how to use it. But if you like this video, if you like this topic, make sure you leave a like, comment, and subscribe for more. You know I post every single day at 8 a.m. daily on YouTube and Rumble, and I can't wait to see you on the next one. Peace.